Alrighty, guys. It is 3:30 this Tuesday, March 12th. And we got still a crazy amount of stuff going on. Oh, sorry, Wednesday. It's Wednesday, March 12th. It's the wrong day. Wednesday, March 12th. And so we got the CPI number this morning, was better than expected. We had mortgage apps was pretty good. Oil report was a mixed bag. The 10-year auction kicked in at 1 o'clock, and it was a little bit of a small reaction around it, but not much. You can see on the bond market, there was a small reaction. This is a little 1 o'clock hour. And then I flip back to the ES to get started. And so on the NASDAQ, right? I did take another trade on the NASDAQ. That's why I have this thing up. I just concluded that before a little bit earlier, but let me go down and talk about that later. So back to the ES. And we are just settling in a range right now. So this is actually interesting. So we are not getting, at least yet, I should say that we're not getting that afternoon selling kicking in yet. It may still happen, but at this point, it looks to me like we may end up with a range-bound close. And that would be a good sign. That would be a sign that we're not extending to the downside. So the news this morning, this was the reaction on the CPI report, a big pop. And since then, we turned it around. They sold off. They were all the way down here in the low end of the range. That's at 55.50s, retesting that. So this is a retest of the lows, right? A pretty good one at that. It didn't extend to the downside, but this was the good support area from yesterday. They were down testing it again today. Immediately rejected. You can see the single prints down and up, right back up like this. That's an immediate price rejection. So immediately rejected, right back up again. And now we are back up holding right around the 5600s, going back and forth, building value. So if they can hold here and end up closing in this range, I'm going to be a little bit more optimistic that we may have a shot of reversing this. So we have a retest. We have one rotation down, an extension, a retest of that. No further extensions to the downside yet. And we'll see if they can hold this line here. That could set up a nice, at least a start of a range where they can start building value. So on the capital flow chart, we could start building value around that 5600 area, and maybe even start setting this up for a potential reversal back up again. So maybe we found the bottom. Maybe we'll find out. But at this point, we're starting off range bound in the overnight. If they close below this area, let me show you this. If they close you below this area, the 5590s, I would start from the short side. And if they close above the 5625s, I would start on the long side looking for early strength. So that would be the only difference. If they close outside of this range, I would look for early strength or early weakness as a starting point. But at this point, range bound, we start. Overall, I would still favor the short side of the market, given that capital flow is still pointed lower. And that's how we kind of get this whole thing started. So one trade early on this morning, bought that low on the way back up. That was and it was pretty gnarly at the time. So I bought that thing, faded just a little bit of heat, got out fairly early at the tablet, and that was it. They since then they squeezed it up to the mean a little bit higher, went back and forth. So I was not going to sit in it that long. It's just too volatile. So if it had ran away a little bit more aggressively to get started, I may have been maybe be more inclined to sit in it. But when a volatile day like this, I'll just take the profit early, or I end up getting shaken out of that trade. And that would have been the case with this trade, by the way, if you watched how that developed. So you looked at how that trade worked out. So I was in here, I was at break even, halfway up here. It ran up, took my profit. This rotation afterward would have stopped me out at break even, and then would have taken off anyway. So that's always the issue. And if you want to avoid that rotation, you have to kind of leave your stop exposed down here a little bit and see. I hope it doesn't go against you. But that's the frustrating part, if you have enough to go to break even and you don't, and it goes against you and you lose money, that kind of sucks. But then again, that sometimes you had to do that to not get shaken out of the trade. Anyway, so we are right here at the mean. Let's see if they can hold on to this and maybe they can avoid that afternoon selling. But if you get weakness into the close, start looking at this on the short side, and they're basically closing below that 5590s. That's when you start off from the short side in the overnight. The one trade on the ES, up 42 on that one. Looking at the NASDAQ and the bonds, just real quick on the bonds. These guys are Bond market is pretty much repriced to the downside and holding, and that's kind of where they're at. Looks to me like they want to take this lower down to that 1608 attractor. Almost looks like they're ready to take out the low, but they've been holding in this range for most of the day. And the bond market trading lower like that is a good sign. That means there's no flight to safety, at least an obvious flight to safety. A little bit of pop on gold though, but so that could be a flight. But at this point, a bond market trading lower is, yeah, I think is a decent sign that the free for all panic in the market is not as bad. It's more of a correction we are looking at. Nasdaq, pretty good move to the downside as well. This morning, same exact dynamic, big move to the upside, complete reversal. And they took this one all the way down as well. So they were way up here, all the way down. Not as crazy much range as the ES. And Nasdaq is closing. You see that at least they're holding this upper area. So if they close below this area, the 520s, I'll start off looking for early weakness. But at this point, starting off range bound and see if they where they're going to end up running here in the overnight. If they close above this 19.7, that ledge, I would look for a early strength dynamic. If they close below that 500, 520s, I would look for an early weakness dynamic. Otherwise, just flat out range bound. And let's see if this finally marks at least the start of a bottoming process here, that we can start finding some support and maybe even start a retracement trade. So the trade I took on the Nasdaq up here, and this one was, you saw, I was looking at this, the rundown here, and slop, back and forth, and then started trading higher. And I was tempted to hop on a short trade here for a move down, but I've seen this so many times now. It's like, okay, it's too volatile. It's either going to extend to the downside, or you're going to get that squeeze. And yeah, we got the squeeze. I was not going to buy into it because you never know how far they take it before they do this. So I was just watching it. But once they run up here to that mode and start pulling back, you can see how the absolute weakness started developing. So I got on a short trade after that bar started extending. They started extending, pulled back up again, and then started extending again. So that's when I hopped on the short trade. And I got a pretty good momentum trade right down here too. I was looking for that reverse retest, and after this they started stalling. I just got my profit. And this is the reason, because then you have a complete retracement and then some, and then they go down again. So the volatility on the Nasdaq is just not easy to work with, and it's sitting in a trade, unless you want to leave your stop up here outside that rotation, you kind of have to be fairly aggressive on taking profits, because I mean you just keep getting shaken out of this. And this was a good trade. This was $60 on the downside, a $60 trade on the one contract on the micro. And then a complete reversal and then some. So I mean, it is freaking volatile. That's what it is. So that was a good one, and then I just kind of stopped at that. I didn't try to get too cute about it after that. And you can see how the volatility picks up now. So up $60 in that one contract on the Nasdaq. So that's the second trade I took today. And then finally, oil and gold. And gold popped and is holding. So I would start gold on the long side. That's a pretty interesting move. Gold blew through resistance at the 35s and the 39s, holding above it. So I would look to buy against the 2940s, 2935s for rotations back up. Below the 35s, take off the long bias, go back range bound. So that's the way I would look at gold. Not going to be very aggressive on the short side, and looking for potential continuation. And we'll see if they can hold on to that or not. And then oil, also building value at the upper end of the range, but not necessarily taking it higher. So they're back up testing these upper ledges at the 67.80 and the 68s. So 67.80s where they stalled, and it's pretty sloppy action going into the afternoon. So I haven't done anything on oil or gold, but I would start oil range bound, looking for potential short trade up here, looking for that early strength. And then on the gold, I would look for early weakness to get long for moves higher. And if the trade below that 35 and taking off that long bias and going back range bound below the 35s, that is. All right, so back to the ES. Let me see. And I think the big question right now is, are we going to get any weakness into the close? So at this point, it still looks pretty good. We still have 20 minutes left, and so far they're holding this range. And if they can hold around the mean, I think we have a pretty good, at least the start of a basing formation being created. So we're getting into stage two, and then let's see if we can get to stage three. That would be a second inside day. Then I would say we're in stage three, and we can start looking at a potential reversal trade. But I think it's a little bit too early. Too many cross currents out there still. We can certainly run down and test these lows, but we've done it 3 times now. So I mean, and you see it better on the capital flow chart. So here you have the different days, right? So you have first big move down, stalls at the 70s, extension to the 30s. Now we're down here trying to test it at the 50s. So this general area, it looks like it's pretty good support. And so far, they have not been able to bust it. Now, doesn't mean they can't. That just means that so far they have not been able to. And if they get into stage three here on the profile and they start building value, I think we have a decent shot at the riding out the craziness and maybe even start looking at the buying opportunity. Looking at the big tech stocks, definitely have been a pretty good day on those. So the weakness hasn't been in tech today, that's been somewhere else. And because you see some of those tech stocks are way up. So there's some bargain hunting or bargain buying starting to happen, that's for sure. So I'm looking at, if I just look at the some of these stocks, the big cap stocks. So let's see. Amazon is kind of, yeah, it's up a couple of bucks. Microsoft is up a bit. Nvidia's up big. Tesla's back up again, pretty big, but they've been so beaten up. So I think there's some bargain hunting going on right now. So I think we may see a base forming, but I would not call it out just yet. I think it's still a little bit too early. You just need a headline, some crazy headline, and the market has a hissy fit again. All right, guys, and hissy fit is a technical term, just so you know that. Alrighty, guys, so far 2 trades, one on the ES, one on the NASDAQ, and that was about it for me today. All right, guys, we'll leave it there, and I'll see you guys back bright and early in the morning. Alrighty, later.